car broke down. We're not going to wait. Everybody's time is valuable. My name is Diane McAllister, and I'm president of Pennsville Town Watch and Community Project. And I'm also a realtor. So the two together. The Pennsville Town Watch group is concerned about this flood issue, and as a realtor, I am concerned. And I think that we need to educate ourselves about all the aspects of the new FEMA rules, and we have to also educate our buyers and our sellers. So we're going to get started. I'd like to, if you could just go around quickly, please speak loudly so everyone can hear, and just say your name and what company you're with, and then we'll kind of sort of that. You don't have to stand up if you want to.
Hi, I'm Brian Savarese. I'm with American Dream Realty.
Don Redfield, American Dream Realty.
Prefer to hear speak Down with American Dream Realty. So we have Lady American Dream Realty.
Eileen Mahoney, Mahoney Realty.
Carol Smith, Mahoney Realty.
John Deneen, Mahoney Realty. Aaron Bergman, American Dream Realty. Warren, American Dream Realty.
Lucia Bureau with the GSCBR Realtors. Jeff Pennsville, I'm president at Gloucester County Board of Realtors. I worked out the Realty.
Phil Nelson with Mercer Hathaway also.
Tyler Roderick from SmartBank, Foundation Floodbank Company.
Kathy Moore, Beach Realty.
Dave Beach Realty.
Paulo Zanero, Berkshire Hathaway, and also
Michelle Hickey, Berkshire Hathaway.
Rose Weaver, Weaver Realty.
Bonnie Davis, Weaver Realty.
Donnie Weaver, Weaver Realty.
Dave Tomlin, Central 21 Town and Country.
Al Wallen, Oak Mortgage.
Istanbul, Carter Real Estate.
Bill Stevenson, Carter Real Estate.
April Dunn, Allstate Insurance.
Brian Zimmerman, Allstate Insurance.
Okay. And my assistant for Town Watch is Jen Dickens, and my husband Lincoln is our video guy today. We hope that this video turns out, because there are a lot of realtors that wanted to come and we just didn't have the room. And we're also going to put the video out on our Pennsville Town Watch Facebook page. So if it turns out, let everybody know and spread the word. And that's Teresa Galera. Okay, for everyone that's coming today, there's complimentary coffee, iced tea, and water. If you'd like to order, some people have already eaten, some are just ordering. Here's the menu to order. And hopefully we can conduct the meeting while everyone is eating, so we can get done quickly and get back to it. Our first speaker, actually, what I'd like to do is go around the room. Anyone who wants to tell a story, a short story, about how this flood insurance is affecting you, business, buyers, and your sellers. I personally, I think that would like to hear a story. Do you want me to talk louder?
Yes.
Okay, I'll try. So I want to start with Brian, okay?
So I don't really have a particular story to tell, probably much like what everybody's experiencing. We have a pretty good investor following, and our investors now are telling us, a lot of my agents, that they don't even want to look at anything that's in a flood zone because of what it's going to do to their business. And I think that buyers are also asking more now than ever how much of the problem. So we're finding it difficult to interest both our investors and owner-occupied buyers because of just the unknown and the perception that they have. So I think everybody's probably experiencing
Thank you for sharing that, Brian. I was just coming here with something that happened to me yesterday that has never happened before. I'm the third realtor in on a listing in Pennsville in a flood zone. We've been reducing the price, each realtor has reduced, and it's down to really a good fair market value, and it has been for about 6 months. Same thing Brian's saying. Realtors call, ask if it's in a flood zone. If it is, their buyers don't want to see it. But yesterday I received a phone call from my seller. He moved a year and a half ago to Delaware. He'd been married and established residency in Delaware with his new wife in Delaware. He received a notice from his flood insurance company the other day that now he's considered a second home. So his flood insurance premium is going to go up an additional 25%. Through no fault of his own, he can't sell his place. So his premium is going to go up 25% more in addition to the normal increase in the premium. So that was the first time that I've ever encountered that, but we may be seeing that happen more and more. Okay, anybody else here have a story?
Also, a seller, you find there, I have some houses that are in flood zone. I'd like to sell them, but I can't get anybody to look at them because they're in a flood area. So I'm stuck between a rock and a hard place. What do I do? If they don't rent, where's the money going to come from? When you do get rent, there's not enough to pay for all the insurance that they require you to have. So we're the money here.
Has anyone heard any stories yet of anyone walking away from their house because of the flood increase yet? Joan?
Yeah, my sister just walked from her house.
Because
of her flood insurance went up.
you know what it was and what
I
it
don't
went
know
up
what
to?
the amount or percentage was, but yeah, she couldn't afford the mortgage. Along with the tax, the taxes went up too.
If you're at a meeting next year, I might be one of those people that walk away from that.
I know. We're gonna try the best we can. This is the purpose of this meeting. So
I think the thing that upset me the most is I had somebody I sold a house to last year, and it's a single person, it's affordable, and she got a renewal notice that said that her insurance was $7,000 this year in Pennsville. And so now she's shopping, but, you know, she went from a $2,400 a year policy to $7,000. And now, I mean, I can't see that they're not gonna start thinking about blaming us, like, why didn't you tell me, or, you know, those kind of things.
education, that's our job. It's going to be to educate. Do you remember the street or the address?
Right behind the police station, trying to remember.
Oh,
River Drive,
Dollar.
Dollar.
It's right where, in fact, I went after one of the big rains, and there was a river going from behind the woods back there, like between her house and the neighbor. It was right up to her back porch step, so there was a lot of little back.
So is she going to be able to afford that premium?
She's gosh, she doesn't think so. I mean, that's a lot of money.
Well, another speaker.
She just lost her job at DuPont too. So, you know, so she had to go out to PSE&G, but I don't think she's making as much money.
One of our speakers today is going to possibly educate us so we can help our sellers that are paying this $7,000 premium to get it lower. So that's going to be helpful for us to Joan.
I had somebody bought a house, went for the mortgage company. The previous owners did not need flood insurance. They were there 20-some years, whatever. Bought a house, mortgage company didn't require it. 3 months later, they sold the mortgage to a different mortgage company, and now she is required to pay flood insurance. Now she's fighting it, but she ended up going to Pennsville National Bank because they said she didn't need it.
Interesting.
But she's suing because they charged her, she probably owes about $10,000 because she says, I'm not paying it. And now they're making her pay that back flood that she did not pay on her mortgage.
Wow. This is worse than I thought. Thelma?
Yeah, I refinanced about 3 years ago and I had flood insurance. They accepted it. But like she said, 3 months into the mortgage, they proceeded to tell me I needed more insurance. I told them I didn't need any more. Well, they raised my mortgage payment $300 a month, said I had $250,000 worth of insurance on a 2-bedroom house. I went to the Pennsville National Bank, refinanced again, and I'm fine.
They don't require it.
They required, all they required was the amount of the mortgage that I owe. That's all they wanted.
So I know what April's saying, but Al
From a mortgage
on.
company standpoint, we almost always used to just require enough coverage to cover the loan amount, or basically just to cover the loan amount.
Right.
But the secondary market in the last few years has really cracked down, and now we have to have replacement cost coverage. So that's where you're running
That's for
into,
sure.
absolutely. You have to have it. If loans have closed in the past, you've always had this life of loan flood cert, which says you have to maintain the flood insurance. And you also sign a document at closing that if, even though your property's not in a flood zone requiring insurance today, if it's put into that flood zone, then you have to have it. And
You're making us sign that.
And now companies are coming back to the original, or we're coming to the mortgagor and saying, okay, you only had to have 1,000, 100,000 coverage, but your replacement cost is $225, $250, so now you have to have it. And you have to. There's no arguing about it. It's in your mortgage.
Now, April, you had, is that like
Today when they sign those papers, probably not.
I just sent it to you. Why not say that?
Why don't we wait till you talk to address what Al just said? Okay, a couple of minutes. Right, okay. Brian, you had something?
Yeah, I'd also heard that there could be situations where somebody who, not that maybe you're in a flood zone, where your mortgage gets sold, but that if the line changes, that the government can be, I guess the remediation line changes, that the government can make you, even if you were not in a flood zone, years into your mortgage, all of a sudden now you have to pick up flood insurance.
That is true. That's what I was trying to say.
Yeah.
You sign it after talking.
Right. Okay, is there anybody else that has a story before we get to the speakers? Right, and go ahead, Teresa.
I had two of them actually. I have clients who are considering bringing their home on the market. They were paying $2,200. They just got a renewal on their policy, $3,600. For a house that's worth about $100,000 or less. My parents, who live near the river, not far, they had considered getting home equity, do some repairs, do some things around the house. They had not paid flood insurance for years. They were quoted $2,200. We had the elevation certificate done, and that's what they were quoted at that point. Went to the FEMA meeting a couple months ago and showed the elevation certificate to people there. They looked at it and they said, based on the old maps, she would have been fine raising her heating system, which is at ground level, to a 1.1 foot higher. Out of the flood zone, or out of that level, she would have gotten a reduced rate. Now, with the new maps, they raised it 2.7 feet. She has to fill in her crawl space another 1.5 feet and put the flood vents in, and she may be able to get a reduced rate. She was in the level raised up because of the new maps. The level that she was in raised up another 1.5 feet. So the policies that they had before no longer work with these new flood maps. But it's, and the policy that she was quoted at $2,200 probably will be twice that now. We're just not gonna be able to, and that was the repairs where she get a few things done so we can sell her house, but we're not gonna be able to sell. Who's gonna buy it? Who, in Pennsville, you know, it's probably worth maybe 120. It's a nice Cape Cod, 1,500, 1,600 square foot in good condition. Where am I gonna find clients that are gonna pay that kind of money?
I know there's some interest.
And as an investor, I don't look at houses unless they're not in a flood zone.
That's another point too, that's not related to the flood, but then when the house comes, like people do walk away, my son lives right on the corner of E and Broadway, and he's at 9.1, we had the elevation cert, so yes, if you moved everything up, you could get a reduced rate, but then the people across the street, the exact same house, the exact same flood zone, walk away from the house, and then HUD puts the house on the market for $27,000. So here's somebody who paid, you know, he paid $72 for it. He's not going to be able to sell for $72. Look at the comp right across the street. And there's the government doing that to us with these low prices.
Who's gonna pay the flood insurance?
Well, and on top of that, if you go, because I went through this, to reassess, or tax assessment again, the tax appeal. Apparently, flood insurance requirement has no bearing on the tax assessment office on the value of a property. So you can't even argue that.
Yeah, but I asked the people on River Drive versus the people on other streets in Pennsville what their flood insurance rates are and their taxes are based on where they're located.
I'm paying over $1,900 for a village house in 2020.
In flood?
In flood, plus in flood. 1,900 for an 874 square foot home. So,
And I wanted to point out, I had asked the people at the meeting about flood vents.
Right.
I have a listing possibly on the river in Carney's Point, and they have a full basement. They said those flood vents are no good for basements. Yeah. So anybody with a full basement, you're not gonna get a reduced rate because of putting vents in.
One of our leaders, father, wants to speak to that. We just had, I should have passed this out to Steve, but this is like a loose agenda of what we're going to do today. Yeah, Carrie, go. Is she just getting it? All right, so I think what we'll do is we'll start with, we have 3 speakers you see on the agenda. We will start with Bruce Shapiro. Bruce, if you come up here. We're very fortunate to have Bruce come to our little meeting today. Bruce is the NJR Local Government and Regulatory Affairs Coordinator. And Bruce, I think you're going to maybe educate us a little bit about the Bigger Borders Act, that's one thing, and maybe tell us what NJR can do to help us, correct?
Yeah, absolutely.
Thank you.
Just by way of background, like Diane said, I work for the New Jersey Realtors, previously the New Jersey Association of Realtors. We changed our name at the end of last year in the Government Affairs Department, and one of the issues we worked on for the last few years with our national association was the issue of flood insurance. Starting with Bigger Borders, the law that kind of initiated all this back in 2012. I'm not sure how many people know the background as to why Congress took up that law working with the National Association. Over a period of time in the years prior to that, authorization, meaning the funding for the National Flood Insurance Program, lapsed. They were constantly doing short-term extensions. In the time period that program lapsed, it meant that unless you were going to a high-cost carrier like a Lloyd's of London, you could not get flood insurance. NAR, the National Association of Realtors, realizing this, worked with Congress on the Bigger Borders Law, which was a long-term 5-year reauthorization for the National Flood Insurance Program. However, like with everything else that happens in Trenton, or in this case in Washington, there were a lot of unintended consequences associated with that law, mainly in the terms of higher flood insurance premiums both for not only existing homeowners, but obviously people who are buying new homes or existing homes for the first time. To address that, last year Congress passed, working in the Realtors Association, and the President signed what was known as the Homeowners Flood Insurance Affordability Act, which was supposed to be a fix for a lot of the issues that came out of Bigger Borders. One of the problems with Bigger Borders were before any of these massive premium increases went into effect, there was supposed to be, basically, I hate using the term a study, but there was supposed to be a study done to see what the effects would be. That study never took place, unfortunately. So like I said, March of last year, the President signed this new Flood Insurance Affordability Act, which is currently still in the process of being implemented by FEMA, Federal Emergency Management Agency. A few of the things that it did was it repealed FEMA's authority to basically increase flood insurance premiums at the time of sale or new flood happened. Just so it turned out that shortly after Sandy hit New Jersey, the flood maps were being revised. One didn't have anything to do with the other. They were going to take place either way. Just as an coincidence of timing. It also provided authority for FEMA to refund some of the excessive premiums that took place under Bigger Borders. It also put annual limits in place for premium increases. I know I heard the 25% number mentioned earlier on, when you mentioned the second home, I think, right? What's that?
Second home.
On the second home. It puts in place 25% is the cap on a second home and commercial property, 18% on your primary residence. That's not to say that you will go up 18% or 25% annually. Those are just the caps that were put in place on older properties, which are identified as those who were built before 1975. And as you'll see, being held up at the back of the room,
okay, thank you.
there are going to be handouts
Out.
that we brought out. The first handout is something from the National Association of Realtors, kind of like a FAQ sheet on this new Flood Insurance Affordability Act. The second is from FEMA's website. If you go on there, I'm not sure, a majority of the realtors from Salem County. I don't know if any of them lost through here.
Yes.
Well, this sheet is on Salem County. I can, if you want, send Diane a few of the Gloucester ones, or if you just go on Google, type in Gloucester County flood fact sheet, it'll come up, and I can also print it you out and send it to Diane if you want to get it out to the group from there. I apologize, I don't have any Gloucester. These are just the ones from Salem County. It also added, as some people may know, a small assessment of policies until everyone pays what they consider the full cost of flood insurance. Prior to bigger waters, one reason was everyone saw these dramatic rate increases where people were paying lower rates than essentially what people said they should have, not enough to keep the program sustainable. That was one of the goals of bigger waters, so that there is flood insurance. So that premium, that fee that they put in was $25 for a primary home and $250 for a commercial property of business or a second home. And lastly, it allowed for second homes and businesses to receive policies through the NFIP, the National Flood Insurance Program. Now, the specifics of this law, just because a lot of it is still unknown even to us in the Government Affairs Department. Obviously, if you look at these national laws, there's thousands of pages. We have information on our website, on the national site, like these fact sheets you're getting here, and they have more full term breakdowns of them. But until FEMA really fully implements it, a lot of it, there are still a lot of unknowns out there being done through the regulatory process. If we're out, I can always send more out as well, or I can provide a link on our website and national site. Now, separate from what happened in Washington was a new law that we have here in New Jersey, which has taken effect with the State Department of Banking and Insurance is in the process of writing the regulations for it now, which we, meaning the New Jersey Realtors, supported, basically mandates that for any insurance policy written in the state, it has to clearly delineate what is and what is not covered. One of the things that came out after Sandy, people had insurance policies, whether it was their flood insurance or their homeowners, and they thought that's fine, I'm covered in the event of a fire or flood, whatever may take place. You know, their basement floods, let's say from the hurricane, or if it's just a bad rainstorm, the river came up into the backyard, I forget who was it just mentioned that, where they thought the water was right from the back door, said, guess what, your insurance policy doesn't cover this because there wasn't any living space in the house. I know a friend of mine on Newton Beach went through that after the hurricane. The whole first floor was flooded, but being that there were no living room or bedrooms down there, her policy didn't cover anything. So basically, you know, a lot of the questions are, and I'll also answer questions after the other presenters if there are any, what went wrong after bigger quarters came place. Like I said, it was supposed to be a gradual phase out of the flood insurance subsidies. But instead, there were these dramatic time of sale increases which were unsustainable, which led to either people walking away from real estate transactions, or as I forget what you named it, the table your sister just walked away from their homes. In addition, there was supposed to be an ombudsman's office set up through FEMA so that you would have someone to go through if there were disputes. That never was set up initially over bigger waters. So because of the new law that was signed last year, and like I said, this is not a fix for everything, obviously, as we heard today, and we've heard a lot from the local state, there are still issues out there affecting people, whether they're selling their home or they're not selling their home, but let's say they still have a mortgage or they're refinancing their property. Mainly, it also said that buyers can retain current flood insurance rates. So whatever the flood insurance was from the seller to the buyer, that can stay the same. Potentially under the new law, like I said, that's what the law states, but it's still being worked out through FEMA right now. Now, while there are maximum levels, previously mentioned 18% and 25%, like I said, those are maximum levels. You may have to pay that much a year, or you may not have to pay that a year. Now, specific to here in Salem County, like I said, some of you have fact sheets to the top, if I can just pull out right there. This top one here, PMARC FEMA's website, this is specific information on Salem County. The one that I'll send you on Gloucester is going to have the most important information in here. Is on the last 2 pages. This is something that you have basically questions in the specific town that the property is located in. There's a contact number. Most of these people work in the town halls, the floodplain administrators in those towns. these are the ones from Salem County, like Dallas and Diane, the ones from Gloucester County, or people do business in towns outside. You can look this up by county through FEMA's website as well. Now, lastly, this is something that was just announced at the end of December from one of the provisions of the Flood Insurance Affordability Act. The Parks and Rec, back in the Ombudsman's office was never set up. There is now a flood insurance advocate in FEMA, interim flood insurance advocate, as they call it, because the office is newly established, it's not fully staffed yet. So far as we know, they don't even have a phone number yet. According to their website, there's just an email address, but there are people there that are answering these based on stated insurance-advocate at FEMA.DHS.gov. So this is one of the things that the realtors advocated for during the process last year to get this office set up. Now, like I said, right now, what we understand they're on a skeleton approval when it is fully set up. This is something that will be able to help. The person's name is running it, was appointed by the FEMA head. His name is David Barrett. He's within FEMA right now. Its main goal is to provide assistance to policyholders on issues relating to the National Flood Insurance Program. So if there's an issue where, you're being told your rate is going from $2,500 a year to $7,000 a year, potentially this is something that hopefully they would be able to help on it once it's fully established. And at that point they'll have an address, the phone number. Right now, all we have is that email address that I set up. But there's also the Flood Smart hotline within FEMA that's been around for a while. 1-888-379-9531. Again, it's 888-379-9531. So like I said, then I'll turn it over to the other speakers. I definitely understand that there are a lot of issues still out there that the law that was signed in March of last year clearly has not addressed or isn't addressed yet. You can still see 18% or 25% increases depending on the type of property, whether it's a primary home, secondary home, or business property. I can't make any promises today because a lot of the federal law was negotiated at the national level by our national associations. I work in New Jersey now. All I can tell you is what I've heard here today and what I'll hear throughout the rest of the meeting and as well at the meeting on the 27th. I will go back to our people. Russell Riggs is one of the primary members of the National Government Affairs there. He's actually been here in New Jersey at a few symposiums we held on the flood insurance in a year and a half after Sandy. He knows the law inside and out. We can also say, obviously, these are some of the issues of what we're hearing. Do you envision any more changes coming either through the congressional lawmaking process or through FEMA's rulemaking process? Now, if it turns out that it has to go through Congress, obviously we've all seen on the news, Congress could be a bit dysfunctional at times. The New Jersey delegation, I'll tell you, they work well together. Democrat and Republican alike. This area, you have some great advocates and Congressman Mobiano, southern part of the state. Just north of us in Camden County, there's obviously a new congressman that came in since Rob Andrews retired in Congressman of course. We can also, when we speak with these officials, I don't know any of that.
All of these politicians are going to be invited to our big meeting on the 27th. I'm talking about Menendez, Lobiondo's office is already sending Robert Geist, his representative. Mr. Sweeney's been able to come, but the main thing are congressmen and senators that go to Washington.
This is a federal issue for the most part.
Menendez, Booker, Lobiondo, Norcross, so they are coming. And from everyone that I've talked to, maybe Bruce can attest it or not, this is politics. It's all politics. The politicians were the ones that did this to us. The politicians are the only ones that can fix it. So, there's power in numbers. And that's what we're hoping, that by having meetings like this, by getting people educated. In fact, at our meeting on the 27th, one of the goals I would like is some or all of these realtors, and even more, to come to that meeting and just sort of like we did just now, stand in front and tell the politicians, this is what's happening in my town. What is going to happen to my town if more and more people walk away from their homes because of flood insurance that they can't afford. We have enough problems here in New Jersey with taxes and everything else. But these politicians have to be held accountable, and we have to tell them, because if we don't, and we don't tell them in numbers, they're not going to know, and they're not going to do anything to help us. And isn't that how NJR is going to help us as well?
Definitely, I mean, there's a term out there, the law of unintended consequences. Maxine Waters, who's the Waters, and Bigger Waters, the congresswoman who sponsored the bill, said that none of them envisioned the consequences of this law when they were putting it through the congressional process.
They didn't read the
Is that camera still on? No, but like I said, for New Jersey, we have some great officials, and Congressman Lobiando, Congressman Northwest, Senators Menendez and Booker, and the rest of the delegation from the various parts
And
of New
we're
Jersey.
inviting them, and we hope that they come.
And like I know you said, you have the representative from Congressman Lobiano.
Right,
He can take that to his boss, who can then take what he's heard back to Washington, so to speak. And we can also do that, like I said, through our contacts at the National Association of Washington. And anytime we frequently see these officials, whether they're the members of the state legislature or the congressional delegation.
Do you think they listen to us in your experience?
Well, I can tell you, as a trade association, they do. New Jersey, we are what our numbers are, we're about a 45,000 member organization. Nationally, we're a few million strong. They do listen to that, because I can tell you, when I work for the realtors, I work for elected officials, both at the federal and state level, and I can tell you, when you start sending those emails and those mass ones that you don't have to write, they're pre-written for you, type your name in and whatever chief officials represent the county you live in. They may not read every one of them. However, you can bet that they are asking their staff to give me a tally. How many people wrote in favor of this issue? How many people wrote against that? They do take that into consideration before they go on the floor to cast their vote on whatever the issue of the day is. So, I tell you, when meetings like the one that's going to take place at the end of the month here in Pennsville occur, and we as the representatives for all of you, for the realtors, go and speak with Congressman Lobiando or Assemblyman Porticelli at the state level.
Yes, it's coming too.
Oh, good.
Yes.
We know them, we know their staffs, and if we say that these are issues still going on, it at least starts the conversation. Like I said, I can't guarantee Congress is going to turn around and change the law, because we all saw how long it took them to reauthorize the flood insurance program in the first place. It took years. But at least it starts the conversation. That's all I can promise you, but I do promise that will take what I've heard here and what I will hear later this month on the 27th back.
Thank you so much.
My pleasure. And like I said,
Any questions at the end, okay? For all of our speakers, if that's okay, then we will get answers. And we may get a bus trip together to go to Washington. Okay, now for our next speaker, I'd like to introduce Brian Zimmerman, the owner of Allstate Insurance in Pennsville, and then Brian, you can introduce your other people. And I'm sorry we're so cramped here.
Good afternoon, ladies and gentlemen. First off, I'd like to thank Diane for allowing me to comment, at least maybe impress upon you, and maybe take out some misconceptions and ideas.
Speak a little louder.
Alright.
I know it's hard, it is.
Alright, so, how many people in here, how many realtors in here have gotten almost to the table on a closing and lost a deal? Alright. Now, how many times have you felt that that deal was lost because of the mortgage rep? Couldn't get it approved? Never had anybody in the last minute not get approved on a mortgage? Alright? Or maybe the insurance agent, okay? They bought a house and they're looking at the cost of the insurance. At some point, you have to look at the process as a three-legged stool. You've got three parties involved, okay? The first is, the most important is you got the realtor. Alright? You're in the heartbeat of your customer. Alright? And what that means is that you have to understand your customer's needs. You don't show a 3-bedroom house if you're interested in a 4-bedroom house, right? It's a very simple concept. The next thing is you have to hope that they get approved for a mortgage. So really the sale isn't all you're doing. You're hoping they have good credit, they can go to a mortgage rep, and they're going to get approved. And then the third leg of that stool is the insurance end of it. All right, and a lot of times, at least in my agency, We find out realtors that are giving misinformation. We find out mortgage companies are giving inaccurate information. All right, whether it's regarding the replacement cost on the home, whether it's regarding flood insurance on the home. So we feel at our end that we put a lot of fires out. All right, now my job here today isn't to talk about my agency over State Farm or any other company. There's a lot of great insurance agents out there. Hopefully you have a one-on-one relationship with them. But I want to just briefly talk about replacement costs real quick. You know, I have a customer in Pennsville that's got an older colonial home, and he made a comment to me, beautiful home, dormers and, you know, overhangs and wood, everything's wood. It's just absolutely gorgeous. He says, you know, if you put this house in Haddonfield, it would be $700,000. All right? But it's not. It's in Pennsville. And the reason I mention that is that we're not insulated from what's going on with the flood insurance, like Princeton and Haddonfield and the Medfords and stuff. Because in certain areas, people will, oh, I need flood insurance. Okay, they got the money. They're going to go out and they're going to buy it. But if you take a senior citizen in Pennsville, which Diane and I talked about, or you take a young family that's literally scraping to get their first mortgage and buy their home and put their kids through the school systems in this town, the flood insurance can definitely make or break the deal, okay? But then there comes the misinformation of the flood insurance, all right? When you buy a home and an insurance company determines the replacement cost, that has nothing to do with the assessed value of the house, all right? Years ago, we had houses that were being sold for $750,000 in Woolwich. We're doing the replacement cost on it, and it's coming up $495 if the house broke down. And we're saying, why would you buy a house and pay $750, $495 on the replacement cost? And all of a sudden, the mortgage company says $495,000 is not enough. We need $750,000 in dwelling coverage. And then as a realtor, as an insurance agent, we're put in a position where it's like, holy cow, we got to tell this person they're overpaying for the house. We're fighting with the mortgage companies. So, you know, that's kind of on the opposite end of things. Now you have the flood insurance that comes into the picture. Every mortgage company is different, okay? And what I mean by that is, April could be on the phone with a mortgage company, and the mortgage company wants 100% of replacement costs. We could be on the phone with another insurance company, and you know they only want maybe what they owe on the house. Okay, so every company is a little bit different. There's deductibles that come with flood insurance, and then you've got the infamous elevation certificate. All right, and there's some interesting stories with that. All right, some of the rules that you're going to see changing as of May 16th, 2016 is when these new flood maps in Pennsville are going to go into effect. All right, to give an example, if you have somebody right now that's in a flood zone bid, all right, it's kind of considered like a preferred risk, all right? They don't really have to maintain it, it's not really as much of a concern, all right? Well, when these new maps come out, those same customers that have a mortgage may be switching to a flood zone A. All right, and mark my word, this is what's going to happen next year. They're going to get a letter from the mortgage company. It's going to say, based on FEMA, blah, 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 you now have to get flood insurance. So they owe $180 on their house. And that's when the process begins. They don't have an elevation certificate most likely because they didn't need it before. So now they're going to run out and get an elevation certificate. Okay? And then from there, they're going to call the mortgage company, call their insurance agent, and they're going to look into getting flood insurance. All right? There's going to be some grandfathering though. So if you have anybody that is not in a flood zone A right now, they're actually in a flood zone B, it may behoove them to get flood insurance now. I know it sounds nuts, but their premiums and their rates will be based on that flood zone B, and they'll be grandfathered in after May of 2016, even when it switches over to an A. It'll be significant cost savings. All right. April can share with you in a minute. We've got stories, people coming in where we've saved them money on flood insurance. I don't have a single, I think you said you have 900 houses in Pennsville in flood zones and paying flood.
944 in Pennsville currently pay flood. And township committees, they're in their meeting right now, they're just talking to me, and looking at the new map, they're thinking 80% of Pennsville will be in flood zone for the new maps.
You have some insurance companies won't insure in Pennsville, but I won't mention names.
Well, I was gonna say that, and that's not even for flood insurance, for regular
For
insurance.
regular homeowners, correct.
That's crazy.
It is. I had Diane say to me, broke my heart, yesterday on the phone, she goes, oh, well, you know, the word out on the street is Allstate won't insure a house if, you know, it's.
Won't get a quote.
Can't get a quote.
Without an elevation.
It depends on when the home was built, all right? There's post-firm, pre-firm. If it was built after 1982, I believe, you have to have an elevation certificate, okay? And the reason in the beginning when I first started off, I mentioned a two-bedroom, three-bedroom house, and understanding customers' needs is every home is different. You could have a house right next to a house, and they're constructed completely two different ways, all right? One may have a crawl space. April happens to live on a slab. Okay, we were talking yesterday, and she brought up a great point. She goes, you know, if I wanted to sell my house and somebody came in to buy flood insurance, or I mean to buy my home, I would tell them to go off my flood elevation certificate, which is pre-firm, because that would be cheaper than if they went out and got a brand new elevation certificate and would end up costing them money. And then that's where the insurance agent comes in. We have realtors that call us, because Allstate revamped their flood platform about 4 years ago. And we just key in the community number, the zone number. There's a lot of other questions and a lot of work. I've had April work 3 and 4 hours on a single household trying to get the flood insurance through. The gentleman that's from the vent company, I mean, there's specifics with that. You know, those vents have to match that crawl space, and he's going to go into that, right? Not to step on his toes, but there's so many variables that go into quoting it. I don't have a single premium on my book unless it's a commercial property that's $7,000 a year, all right? And the old adage that a little bit of information is dangerous is true, because when we hear, like for instance, you know, back premiums with mortgage companies and stuff like that, you know, that's a term, it's been around forever, because there's people that were told years ago they were supposed to get flood insurance, okay, but they never really got it. The mortgage company doesn't have enough manpower to constantly check and make sure they have it. By the way, these banks that insure properties, all right, they get fined per household. The regulators come in and search those files, and they don't have an up-to-date flood policy deck page in there. So some banks are really great at it, some mortgage companies are not so great. So that mortgage company may be coming back to that person saying, hey, you didn't have flood insurance, we need back premiums. If somebody gets canceled, somebody doesn't pay their premium for homeowners insurance, maybe they're paying $600 a year with us, they get letters from the mortgage company saying, hey, they're forcing me to get insurance through them. It's now $3,500 a year for a homeowner policy. Yeah, it's cool. It's called forced place coverage. And they're basically saying, hey, if we have to insure your home as a mortgage company, we're going to charge you $3,500 a year, all right? So in the situation where a person's paying $7,000, there may be a couple reasons. We have people that pay their house off. So maybe the house is, maybe the value of that house is $250,000, all right? And they've always had flood insurance, okay? And they've gone out and they've refinanced, all right? And all of a sudden the mortgage company says, oh, you need to go buy flood insurance now. And they didn't realize for years that their home was paid off. Sometimes the replacement cost of a house is so high that that's why the premium is going to be so expensive. And they'll come in and we call the mortgage company and find out and say, well, wait a minute, you know, yeah, the replacement cost is $285, but you only owe, you know, $180,000. And we personally call the mortgage company to see what is the lowest amount of flood insurance protection they can have. You know, it's interesting. I think 25 to 30%, because you have high-risk flood zones and you have moderate to low risk. 25% of all the claims filed through FEMA, all right, are in moderate to low risk, not high risk. All right, from Allstate's standpoint, we learned a lot. All right, with Hurricane Irene, immediately after Hurricane Irene, some of the carriers that we write for, other than Allstate, had rate increases immediately on their homeowner policies. After Superstorm Sandy, boing, they all went through the roof. Rates went up and up and up. Okay. What Allstate found out is we thought after Superstorm Sandy that it was a shoreline, right? All the beach houses and the sea isle and all the stuff you saw in the news. The news didn't show you everybody 20 miles in. Those were the real victims, all right? From an insurance company standpoint, talking with our claims department, they said, we learned a lot. Like, we never thought that a hurricane hitting New Jersey was going to be affecting 20-some miles in. Like, that was a really big deal. A lot of insurance companies couldn't get their arms around it, okay? That's where you hear the nightmares. People took their homeowner policy out, and they said, well, I never had to have flood insurance, I'm not in a flood zone, all right? And you gotta keep in mind, FEMA's federal emergency management agency, right? They handle like everything, tornadoes, and, floods, and, hurricanes, and all sorts of other natural, disasters, so to speak. So the flood is only one aspect of it. Flood insurance, I think, is probably one of the biggest wastes of money until the day you need it. Right? I don't agree with what's going on with the flood mapping. We're really trying to get our hands around it as an agency because we pride ourselves. That's a sore point with everybody before all these regulations went through. But I can say this to you, and I'll sum it up with this. My wife and I first got married. We bought our first home. And my realtor took us out to about 25 different houses. We couldn't agree on nothing. So she called my wife, Cindy, and I in. He said, sit down. He says, here's a piece of paper for you. Took me in a different room. Here's a piece of paper for you. You write everything you want in the house. You write everything you want in the house. And separate these. I said, Marcia, what are you doing? She says, you're driving me nuts. I'm showing 25 houses. You can't agree on nothing. She's like, so we're going to whittle away what is most important to the both of these. And I learned a valuable lesson then early on in my career is that selling a house, insuring a house is very similar. There's so many different properties. One house can be elevated, next one isn't. One's 2-story, one's 3-story. The interesting concept of that is contents. We've had people come in, they got $125,000 in contents coverage on a 2-story house. That's like, wait a minute, let's drop the contents down. If there's a flood, it's not going to flood in Pennsville 18 feet up. Maybe you have the first floor that's damaged, so maybe you don't need 75,000 or 100,000 of contents. Maybe you need like 15 or 20 or 30, and we've been able to reduce premiums that way. So there's a lot more work that goes into it behind the scenes. And the last thing I'm going to say is what Diane said is, all these politicians, they have a 1-800 number. So if you're a disgruntled citizen, you can call that 1-800 number and say, hey, I'm so-and-so in Pennsville, and I don't agree with what you're doing, I'm not going to vote for you next time. I don't care about that. They're doing that to appease you. All right? Let me tell you something. You've got, 30,000 realtors across the state of New Jersey that have all banded together and said, hey, you know what, this is an issue. This is affecting our livelihoods. All right? And I think that's what Diane is trying to say. And there's some other things out there. I mean, we were talking yesterday, there's a process, and I don't want to get too far into it, where, depending on what Pennsville does, I know the township's looking into it, if they're able to satisfy certain requirements and things like that, they can further discounts on the flood premiums. I mean, there's other things that are coming about. So I think that you have to look at the glass half full, as opposed to half empty. I'd just like to ask April, who's my office manager, is anything you want to add?
I'll just wait for the question.
You sure? All right. So anyway, if you ever have any questions, you don't have to buy anything from us, you don't have to recommend us to anybody, you call April. She'll be glad to answer any questions. She's a flood specialist.
Yeah, some of the realtors.
Yeah, I mean, we pride ourselves in that. If we don't know the answer, it's just like an attorney. You can go to an attorney's office, get back, and then when you leave, he goes to a row of books behind, and he'll find that answer. And we do the same thing. We call our flood, back home or back office sometimes, saying, hey, we got a problem. We don't know which way to go. We fix it that way. But we've seen significant cases. People come in, they're paying $2,200, they walk out, they're paying $1,100. We were talking yesterday, this flood elevation certificate, we really want, in my opinion, to make sure that you are working with an agent. There's agents out there, State Farm and stuff, that really can go into their company and help that customer save a ton of money. Because it can make a big difference. Just 1 or 2 things being on. We've got people come in and say they live on a slab and they're on it. Cross makes a difference.
Thank you, Brian, and I'm sure after we get done, there's going to be some questions. Carol, did you have just one quick question?
No, I didn't have a question. I just wanted to thank Brian for coming, and I just want to let you know that is who my go-to person is April. April does a fabulous job for you with the flood insurance, and I always say, it's in a flood zone, call April.
Good recommendation. Good recommendation. Thank you, Carol. The CRS that Brian was talking about is called the Community Rating System. Pennsville Township, I know, is working on that right now. What it means is, and I don't know, maybe Tyler, you might know about this, communities are going to do certain things that FEMA requires to get their insurance lowered as a community. So if you hear that CRS community rating system, if you'll touch on that too. Yeah, let's get going now to Tyler. This is Tyler, excuse me. Tyler Ardron, and Tyler is agent for Smart Vet Foundation Flood Risk Reduction Plus. And Tyler's going to hopefully tell us ways that we can tell our homeowners that they can possibly save on their flood insurance.
Yep. So hello everybody. I'm from Smart Vet. We're a foundation flood vent company. Our home office is in Pittman. That's where we were born pretty much and raised in Pittman, New Jersey. A little bit about our company, Smart Vet. We were in business for 14 years. We promote good floodplain management. So, me personally, I'm a certified floodplain manager. In the office, we have about 15 people who are also CFMs, or what they call it. Just staying up to date on all the different flood mappings. We work with FEMA and NFIP with different changes that they made. Personally, we've done different community days like this. We've been to recently Cape May, Monmouth Beach, and just a few other ones that where the towns, kind of like everybody here, they're in question, why the house is sold, etc. And we're there to help. So we were, like I said, born and raised in New Jersey. We have over 400,000 vents today in the field. That's all across the country. Our vent is an ICC certified product. It's engineered. That more surveyors are more interested in that kind of stuff than engineers. But anyway, we also protect over 80 million square feet of land in the floodplain. So one of our biggest markets is New Jersey, being we started here. Down the shores, if you go by, you'll see all of our vents pretty much on every house. We're in New York, Florida, all across the country. But now what we have is, our company's more like a puzzle. So we have a few different branches. Smart Vent is our main, that's where we started. We also have a service called the Flood Risk Evaluator. We like to call it FRE. So what we do is we review elevation certificates. On average, we get about 50 to 100 elevation certificates a week from realtors and surveyors. We'll review them because, like you were saying, that $7,000 premium, that shouldn't be there. So we review the elevation certificate. We see what the reason is that it's $7,000. Sometimes it's venting, sometimes it's grading. Depending on what it is, mitigation-wise, we'll send back a detailed report to either the realtor or the surveyor that they can give the homeowner to show what they need. Another piece of the puzzle is our Risk Reduction Plus. That's who I personally work for. And what we do is we actually will make a quote. All we do is the flood insurance. And we'll do a quote on if they do this mitigation, what it'll bring them down to. And that's just not our quote. That'll, like, if you want to write through Allstate or whatever, that's because everybody writes to the NFIP. So if they do these mitigation techniques and say I quote them out at $500, they can stay with Allstate or whatever, the State Farm, and they'll go down to that same $500 if they do this mitigation techniques that we say. So that's pretty much the puzzle for us. First I want to get into, I know you were talking about the big orders and all that. So the big orders was enacted in 2012. What it was doing is just making sure that all these rates were going up to their actuality rates. What they did is now they have the Grim Orders Act, which is the HFIAA. And the reason they did that was just because there was more of everybody was up in arms about the Grim Orders Act, and rates were just going up. Right when someone sold a house, they planned to put the rate to the actuality rate. So it was impossible to sell a house. So now with the HFIA, I actually had a call with FEMA yesterday, which is pretty good because now I'm here today talking about it. But starting April 1st of this year, everybody's going to start going to their actuality rates. That's not primary residents. Any subsidized rates, meaning if the homeowner doesn't have an elevation certificate and they're subsidized, they're going to be going up 18 to 25% a year, starting April 1st. And that's right from FEMA. Also business properties, they're going to be going up 18 to 25%. And like you were saying, that non-primary residents, the secondary homes, they're going up too. Now there's also a $250 non-primary surcharge that's going to be charged April 1st. People are already going to begin to get letters in the next few weeks saying that. And also a $25 for primary surcharge. and that's a surcharge. So pretty much they don't have an elevation certificate. Like when we help a surveyor or if we help a real estate agent, that they say, listen, I have different connections with real estate agents that they say, my client has $4,000 flood insurance premium. So I say, okay, send me an elevation certificate. They don't have that. There's no way to get their actual rate. So that's the main key, is getting that elevation certificate so we can see what we need to do to get this house into compliance. And then I wanted to talk more about today. I have one here, I thought there was going to be a projector, but I have different case studies where we help these homeowners bring their flood insurance down. Like I said, all the time we're about 50 elevation certificates a week. We're helping probably, say, 20 of them do the different mitigation techniques to lower their flood insurance. So what we do is, actually in Ocean City, New Jersey, I was helping a homeowner. They had a $3,000 flood insurance premium. It was a brand new built house last year, I think it was, and they've had their smart vents in, so that's why they came to us. They knew we got them right from the homeowner. They sent me the elevation certificate. I saw that it was their flood deck page at $3,000. They were wondering why, because on average, when someone installs our smart vents, we save them up to 83% on their flood insurance premium. So I looked at it over, and it was a simple case where they just didn't have vents in the garage. Any attached garage is supposed to be vented too. So all we had to do is just retrofit 3 vents in their garage. And what happens is, if they're not properly vented, they get rated at the bottom of that floor. So if they're not vented, and say it's a crawl space, they're going to get rated at that bottom crawl space slab. So say it's the BFE's at 6, that's where, is everybody here familiar with the BFE, the base flood elevation level? Say it's at 8 or whatever, the slab's at 5, they're going to be a -3. By venting that, what happens is that gets exempt and they go up to the next floor, which is say a 0 or plus, whatever, depending on wherever the first living floor is. So what we're having with this case, they were getting rated at the garage slab. We properly vented that garage. We brought them down to $500. They went from $3,000 to $500 just by putting 3 vents. So that's a great scenario where it's just an easy fix. All you do is put the vents in. Of course, with the basements, I know that's a big thing around here. Just because now they're getting back to the agent. Before they weren't even in a flood zone, so they already have basements. Venting mitigation-wise, there's really nothing we can do. What we recommend is filling the basement. We have companies that do fill. I mean, it does cost a lot, yeah. But their flood insurance is going to go up to the actual rate.
Can I leave my husband down there?
Yeah. No, you're pretty much, yeah. Because you're getting rated at the bottom of the basement floor, which is 4 feet below the BFE. And flood insurance is similar to car insurance and everything. If their house is more riskier to sustain damage, then, I mean, obviously it's going to be a higher premium. So what we recommend is, I have a case study here if anyone would like to see it. We're actually working on a house up in Hoboken that we're filling in the basement, properly venting it, bringing them down from, I think it's, I can get specifics if you want to see it, like $13,000 flood insurance premium down to, I think, $3,000, which, I mean, it's still a lot, but out there it's obviously different. And that's huge savings. So yeah, fill does cost a lot of money, that does cost a lot, but I mean, it makes the house easier to sell too in the future if that's ever. So yeah, I mean, that pretty much ends my presentation. I have different documents in the back, my number and everything on there, where you can start sending your elevation certificate to our FRE service, and we can start sending them reports back on what you need to do to help get these houses mitigated. Like I said, we work with about 50 to 100 elevation certificates a week, and usually turnaround time is about 3 business days to send back the report. And that's just something you give to the client to make you guys look better, and it just shows them what they need to do to get that flood insurance lessened and gives it easier sell for you guys.
I have a question, not to paint you in a corner, but I'll talk about the corner. All right, so from a cost standpoint...
Excuse me just a second. Can you just speak up so everybody can hear what you're
I
saying?
just wanted to ask a question. I think it's more, has more to do with the realtors and say, even myself, but if let's say they come across a home and, I don't know, let's say it's a 1,800 square foot home and they need 4 vents and it's in a cross, like, what is the pricing range from per vent?
To vent it. So we're a manufacturer of smart vent. We don't sell direct to customers. We sell through distributors like 84 Lumber. I'm trying to think what's around here. Like
Dry guys?
Dry Guys is an installer. So you can go there and purchase it through them. They'll install them. On average, to install a vent, around $300. So, say 1,800 square foot house, our vents cover 200 square feet each. So what's that? 9 openings. So whatever the 9 times the 300 is, what is it? 2,100. Yeah, whatever 2,100. But the thing is, if they're having $3,000 in flood insurance premium, by putting in them vents, at getting them rated at the first living floor, they might go down to, on average, like I said, we save 83%. They might go down to $500. And once they're down that, I mean, the return on investment, on average, again, these are all numbers with everything we've done, is 1.5 years on their flood insurance. And then after that, over the term of the mortgage, if they're required to have the flood insurance, I mean, that's just money that they save.
Let me ask you, do you have situations where somebody's, they're about to sell their house, and they're thinking, you know what, let me, as a concession, put some vents in, maybe they need 6 or 7 vents.
Yeah.
There's a way to alleviate that from the cost of the buyer.
Yeah, so we've, in the past, actually last month, I was working with a real estate agent in Cape May, where now that our smart vents are so well known, that they'll actually put in the ads for the sell in the house that smart vents are installed. So it does make an easier sell on the house because the new guy coming in to buy the house is going to see that it's properly vented, it's in compliance, they're not going to have a large flood insurance premium. That could be a selling tactic too. So if they see, because they see a house that only has $500 flood insurance and it has the smart vent, it's properly vented, they know in the future when they go to sell again that the house is in compliance and they don't have to worry about a $5,000 flood insurance premium.
As long as the law doesn't change.
Yeah, well, it's not the law, it's pretty much if the BFE were to change it. But that's why, again, about the CRS program that Diana was talking about, what the CRS program is, the community rating system, is when a town comes together as a whole and brings all their homes into compliance. And they'll go above and beyond what FEMA recommends. So in Sea Isle, about 2006 now, so what's that, around 8 years or whatever. 8 years ago, we've helped them go to in the CRS program and become, I think, a level, whatever the level is, by having all their houses vented. This is actually another case study that we did. So Sal DeSimone, I don't know if anyone's familiar with him, he's a code official down the shore, and he applied for the CRS program. What happens is when you apply for the CRS program, FEMA comes out, they review everything, and that's how they rate it. So they came out, they reviewed all the elevation certificates, said, oh, everything looks great. They were, all right, let's go out in the field and view everything there. They go out in the field, and what they saw was, on the elevation certificates, there's a number for flood venting. What happens is, if they have non-engineered vents, what are like the little air vents, and they're rated wrong, the surveyor can write the wrong number down and say, right, 1,000 square feet when it's only covering 600, then what happens is maybe they're getting insured for that lower premium because the insurance agent's just pushing in the numbers on the elevation certificate. But when FEMA comes out to do that audit, and they see that the vents are being measured incorrectly, that's a denial. So what happens was they got denied for the CRS program. Also, this guy from FEMA said, if you don't get these homes into compliance, you can actually be suspended from the NFIP. So they gave him 3 months to get all these homes up to code. What happened was we brought all these homeowners into court, told them, with summonses, told them what they needed to do. We had Dry Guys, which is one of the installers, they're down the shore too, install vents in over, I think, like 80 different houses in Sea Isle, New Jersey. Install our vents, ripped out the bad ones, the air vents, made sure that they had enough coverage. FEMA came out again, I think it was 90 days later. When they did the audit, they passed, and now they're, as a whole, they save 20% on their flood insurance. And that's the community
They don't
bond.
pay for that, the homeowner pays.
Yep.
Oh, you might as well forget that around here.
And then other ways that, and what it is each in the CRS program, you're considered classes. So now they're doing, Seattle is enacting that Homes Institute 3 board, which is a building above the BFE. So they're requiring that all new homes are 3 feet above the BFE. And the reason for that is if laws were to change again, raising the BFE, they're covering their, they're pretty much covering themselves. That the house is already built up 12 feet or whatever the case is. So they're prepared for it.
So accessibility goes out the door too, because I know a lot of our homes now, I work for Habitat for Humanity also, and we build all our homes accessible.
Right.
And we don't build in flood zones. So now if that goes up that far, here you got a disabled person can't get into the home. What do you do?
Yeah, and the only thing is allowed to be below the BFE, what's supposed to be, is enclosures like crawl spaces, garages, unfinished space. So that's why if you're in a basement, etc.
Now, let's say, you say the whole community as a whole has to together and do that.
Yeah, if they want to be in the CRS
Our
program.
township is doing it.
Okay, but my question is, like, what if your house, like, I'll use mine as an example, I'm on a slab. You're not gonna be able to do
You're not
that.
fencing it, no.
So, will people that are built on slabs?
No, it's only for homes that are, say, built up on crawl spaces. It depends on what class they want to go to. So, like I said, there's different classes. I think Seattle's now like a class 4. So it depends on when you start out at the earliest class, where maybe they're only getting a 15% take or even less than that, where they're requiring all new homes to be built up higher. It depends where they want to do it. Like, if they apply, you have to apply for each class, and then you just keep doing different techniques to do that. But like slab and grade, stuff like that, they're not going to require anything. But down the shore, what they're doing now is they're lifting all the slab and grades. And what they're doing is putting either a garage or a crawl space underneath and venting it.
Yeah, because I know just from doing insurance, they wouldn't even build a house like mine today.
They won't.
So,
And that's like for new construction. But if they do in the future want to go even higher, then you have to raise the house. But that's, not getting into that, right?
Yeah, I wanted to add a real quick note, like, about the vents and everything. It's really important is that I've actually heard April, I think it was like last year, maybe even the year before, we had somebody who was actually in the process of trying to sell the house. And I hear her out there telling him to measure the vents, and he ended up coming back, and I think it was one more vent or something he had to put in. And that ended up being a big deal. So the reason I bring that up is there are houses in Pennsville that already have vents.
they just don't have enough.
They don't have enough, and sometimes those situations, as a realtor, you're going in, you're telling your customers, hey, you got to paint the fence, you got to fix this softening, you got to, get rid of this. You may want to put carpeting in to show the house. So as a realtor, you're preparing your customer to bring that house to market. I don't think it's so far out of the extreme to say, hey, listen, it's not the end of the world that you are in a flood zone, but there may be some things to help you along the way to sell the house that you may want to take off the plate of the potential buyer. One of the things we talked about is an elevated flood certificate. If that house is going to be put in a different flood zone, okay, it may be in the best interest of that buyer to spend, or the seller to spend the $300, procure that flood elevation certificate, and that's one less thing they have to do. And I know it's one more thing, but not everybody has their house mortgaged out to the hill. So that person that owes $120 on the house is selling it for $180. To get that money out of the house when they sell it, they are going to have to prepare some things. And that's just an idea from like our end. I know April had specifically talked with one of our customers about that, and they actually went ahead and did that. And that was the difference in selling the house and not selling the house.
Tyler, do you still have more?
No, I'm good. And like I said, if anybody wants my information or card, I have.
We passed out your,
Okay. Yeah, you can start sending your ECs over or whatever. We can start sending back to our boards. Also, I specialize in doing presentations for real estate agents. 1C credited, so I can come to your office and do kind of like this, only a little longer. So just give me a call. Thank you.
Thank you so much, Tyler. Okay, what I'm going to do now is the waitress is going to be coming around just a minute with everybody's check, so nobody leave until you pay your bill. okay? And I wanted to let you know that I'm going to be giving Maria your emails periodically up until the meeting, the 27th. But I realized from this meeting today that if our public officials and our residents hear some of the stories that we heard today from our fellow realtors, you're going to make a significant impact at our meeting at the FFP. So please, if anybody is willing, and I know it's hard to get up and talk in front of us and all, but if anybody would come before the meeting and just speak for a minute, just like what Brian said, what Sue Ann said, what Joe said. We need to get this information out so people know. Because I know I've talked to some township committeemen that live across the street from the river, and they said, Diane, what are you talking about? My flood insurance is only $300. Well, their house is a newer house. It was built probably up to code. So they don't, if it isn't affecting their pocketbook, they don't get it. But if it's not affecting their pocketbook today, it may next year. That's when there's going to be an outcry. A lot of our residents are getting $3,000 and $4,000 flood policies and can't afford it. So what I'd like to do is, if anybody thinks that you'd be willing to speak, please email me or call me or whatever and let me know. Because the organization of this meeting, I mean, I'm a rep about it, to tell the truth. All these big politicians there and code officials and floodplain managers, I'm sort of out of my league here. So any help I can get, I would certainly appreciate it. For the realtors wants to come, Bruce, I don't know, are you coming to that meeting? Did we discuss that or not?
So far as I know, it's on my calendar.
Okay, good, good. And Tyler, are you coming to that meeting?
Yes, I'll be there.
Okay, good. So tell all your customers too about what you heard today and that you're coming. Okay. That all these different people are going to be there to educate them. And then I think I'm going to invite Dry Guys so they can, no, this isn't to sell product, okay? But I'm going to invite Dry Guys to have a table there. So if people want specific information, your customers, you whatever, Dry Guys will be right there. Brian's going to be there. Maybe you'll have a little table or something.
Yeah, I mean, flood brochures and stuff like that. I mean,
And any other...
I'm more interested, to be honest, in the township's doing to lower the rates of the
Well, okay.
whole and things like that. I mean, I think that's a great move on their part.
What the township is doing right now is they're working on the CRC, okay? By making sure we have our equipment for our, what's the equipment called that goes, gets the leaves up out of the gutter? What's that called?
Leaf sucker.
Yeah. The township is working on that.
Leaf vacuum.
And believe it or not, by us having this meeting at the FOP on the 27th, Pennsville Township is going to get many points with FEMA for the CRV. So that's why it's really important. Let your friends, neighbors, relatives know. Gloucester County is invited to come to this meeting too. And I'll tell you, you probably eventually maybe want to get some groups together in these towns that you live in.
The FOP don't have enough room?
Yeah, standing room is, I think, 450. With chairs, I think it's 300, 350.
What time is it, Diane?
7 o'clock, but I guarantee you, between now and the 27th, you will see something on Pennsville Town Watch Facebook page. In fact, if anybody wants to, when they go to Facebook, like us, Pennsville Town Watch, and you'll see every other day I'm going to be posting something about this meeting. And it's also going to be in the newspaper. I'm going to have Maria send things out, so you will know about it and you will know the time. Now, as some of our Gloucester County realtors, are you having concerns in Gloucester County like we are here? National Park? National Park? Westville? Gibbstown?
Anything hard or West Denver?
Anything with Delaware River.
That's what I thought, but you know, we just kind of isolated.
Township as well.
Which township?
Logan Township.
Logan? Sure it is.
Alden's Creek. You got,
You mean like Foxtown Village
you
and
got
those?
a lot of towns that back up to Alden's Creek, and that's
Okay.
all potable, that's all flooding, and all flood issue there.
Now, I know everybody is busy and I don't want to keep you. Did the waitress get the bill out? Okay. However, sure, I want to just tell you, after you paid your bill, if you have to leave, please go ahead and leave, understand. Anybody else that would like to stay and speak with Tyler, Bruce,
Can I just say something real quick?
sure,
That's important.
speak
too.
loud.
If you remember prior to 2009, no disrespect to any realtors in here, but like everybody was becoming a realtor. Everybody was becoming a real estate investor. And you had journeymen, I like to call them, realtors that were in business. My realtor just retired after 35 years. And I remember having a conversation with her back then, and she said, it's driving me nuts. She's like, these people now, they're in Prudential Preferred Properties, and they have zero experience. They got their customers chasing documents, their customers going to the township to chase down different zoning issues or getting something from them that they need. And then you had the market correct, and you had the housing bubble burst, okay? And what you had is you had a cleansing, I'd like to say, of all the amateurs. And I think it's a testament that all you have showed up. I think Diane's done a phenomenal job with organizing this, but, there's going to be people out there that don't want to buy a house in the National Park, and you're going to have realtors that refuse to sell it because they're not educated enough, they're not professional enough, and they don't understand the job of being a realtor to see that customer through, why they may really want to purchase that house even though it is in a flood zone. And I think that's something, the fact that all yous are here. I really thought, you said 40, I thought I have half will cancel. And I think that...
Well, we have 10.
Yeah.
10 people.
I mean, the fact that you're here, though, it is a big deal because obviously you've been in the business for a long time and you care and you know what's going on. And I think that's something that's got to be noted.
Well, I just wanted to say one thing as Pennsville Town Watch, just to give you a quick overview. We started 4 years ago as Pennsville Town Watch, period. We started because 12 people came to my house and sat in my living room 4.5 years ago and said, what is going on in our town? Are we really having this much crime? Nothing was transparent, we didn't know. So that's when we started Pennsville Town Watch. And we got an Oprah request at the time to get our detailed narrative police reports. And 12 of us sat down and went over 6 months of detailed narrative police reports. And after doing that, that's when we realized we needed Pennsville Town Watch. Well, 3 months after forming Pennsville Town Watch, we realized we needed more. We needed Pennsville Town Watch and community pride in order to do things like this, in order to educate the people in our township about what's going on. So it's been a learning curve. We started this from scratch. And if anybody wants to know about this for their community, I think every community should have an organization like this. Because we've been in this business for 4.5 years, we already have a grassroots organization that is in place to do things like this and to get people involved because there's power in numbers. And just to cut this short here, but our saying is, never doubt a small group of thoughtful, committed citizens can change the world. And that's from Margaret Mead. And we truly believe that. A group of people who are committed. And people will say to me, Diane, you're crazy. This is politics. We're never going to change the federal government and this and that. And I said, well, guess what? If everybody feels that way, it never will change. And I think we can do it. So thank everyone for coming. You can pay your bill, you can stay, you can ask questions of professionals that are here. I'm going to leave it up to you to decide. I know your time is valuable. So anybody have any questions for Tyler, Brian, or Bruce? Please feel free to ask them. Or you can do it after the meeting, whatever you want to do. I just want to thank everybody for coming. Please email me your comments and suggestions. I really
Can I ask Brian a question?
Yeah, right.
Was State Farm not insuring in this area? Is it possible, what does that mean, really? Like, and you don't want to say, I don't want to say something that's not true.
First off, there are certain companies that aren't insuring here, but I want to be very blunt, all right? I've got people that call me from Hoboken all over the state. The shore properties are tough to write homeowners in. It's like you get Lloyd's of London, certain carriers, right? And I have customers that call me down there and want to buy a flood policy, and I say, who's handling the homeowner's insurance for you down on your shore property? And I say, listen, go to that guy. The fact that he's insuring that house is a big deal.
Does that
Now-
make the insurance higher on, is the
Well, the
insurance
thing is
higher
this,
also?
that State Farm, from what I understand, I'm friends with Kevin Jordan, all right, he's a friend of mine. He said, Brian, we're just not insuring in Pennsville. They consider it a barrier island. If you look at off Hook Road, the way everything wraps around, State Farm doesn't want to insure in Pennsville, but he can write flood insurance, all right? I think that the homeowners and the flood insurance, in my opinion, goes hand in hand. I have customers that come in, all right, that I refuse to take from him as a professional, etiquette, and say, look, you got the flood with them, keep the flood with them, but they have come to me and said, I can't get homeowners through him on a house we're buying, and we used to have our house insured in Woodstown. Every property is different, but it depends on the insurance company. State Farm may turn around next year and be right back into it. Allstate stopped writing homeowner policies in 2006 because they went to the New Jersey Department of Banking and Insurance. They had too many houses in New Jersey insured, and they were worried about the big storm. Also, 50% of New Jersey is clay soil, the other 50% is sandy soil. Okay, all these homes, just like Pennsville, that had oil tanks below ground. Everybody knows the oil tank prices, right? Can't sell a house on an oil tank, all right? You gotta move it above ground. So what happens is clay soil contains, sandy soil spreads, right? It goes right through it. Allstate, just like a lot of insurance companies, auto insurance rates go up every 6 months, right? Why? Because healthcare goes up, MRIs go up. Homeowners insurance, you don't see insurance companies take rates that much. Usually when they do, it's because their rates have kind of been set for like 10 years. Now, on a homeowner policy, if someone says their rate went up, yeah, it went up because of CPI, their coverage went up a little, all right? Now, with the oil tanks, Allstate stepped back. We didn't write a single policy on Allstate paper, at least to my agency, from 06 to 2014. Allstate across the country revamped their homeowner product and said, okay, they cleaned up the existing book, sent letters to customers that have tanks below ground, wanted to try and clean up the risk, right? Because, like Tyler said, it's all about risk, right? And they re-entered into the state. I think State Farm's kind of going through that phase. They're saying, you know what, let's just take some inventory here, and they may be right back into it. They're an awesome company, all right? If you call Progressive or Geico, they're going to write you, I'm going to tell you right now, with a homeowner insurance company you never heard of, but your Liberty Mutuals, your State Farms, your Allstates, those carriers, they're putting it on paper. There's some other good companies out there. We wrote a lot of Travelers and Selective and stuff, but it's a company by company issue. I have not heard anything on Allstate's side that they look at Pennsville and stuff like that. I'm going to be honest with you, the last storm, April said, she's what, 15 houses from the river? Those pumps go out, you guys are in trouble. I mean, Pennsville's going to water, all right? There's a reason those pumps are there, all right? 2 hours before Superstorm Sandy hit, I got a phone call from a guy in Deepwater. He says, Brian, I want to get some flood insurance. I said, there's a moratorium. He goes, well, you got my own home. He goes, you don't want to sell me flood insurance? I said, you can't, there's a moratorium. I can't even bind it for 30 days. I said, wait a minute, you used to have flood insurance with us. He goes, well, yeah, I paid the house off, so I didn't need it anymore. We have customers that come in that live in Deepwater, and they go, great, my house is paid off, I don't need to spend this $1,200, $1,300 a year anymore, I don't want the flood insurance. And we're sitting there saying, please, just keep $20,000 of coverage. It's $200 a year. Just keep something so that does happen, you have coverage. So it's not always whether you need it. Just because you need something doesn't mean you should buy it. Just because you don't have to have it by law doesn't mean you shouldn't own it. All right, so it's something to consider.
Thank you.